I'll talk a bit from the Eurozone crisis angle and try to discuss lessons we learned from the crisis. First of all, I think Europe needs a central bank. This is something we started to realize in 2010 with all the rights that central banks tend to have. I mean, there has been a lot of evolution since then in the thinking in Europe, and both the European Central Bank has acted in a more accommodating way, and also other institutions have been created with a supervisory or a funding capacity which are complementary to the central bank. The second thing I think we learned that is the common currency was designed having only good days in mind. It had some rules, but there was no thinking at the European level when the common currency was first adopted on how we will react if we ever had a funding crisis in one of the member states. I think the third lesson, which has not many countries haven't kept, and Greece hasn't kept for some time, is that rules need to be for all and at all times if we want to have the credibility of the common currency. And I think that will be a debate that we will be revisiting again maybe in the near future. The fourth lesson we learned is that countries are not corporates. They're not acting on the same way from an economic point of view. And cost-cutting in a a country reacts differently than a corporate when you have cost-cutting exercises, because the taxpayers are also the consumers and many times are also the employees of the state. And there was a recent paper, I think, from the IMF when they were looking at the Greek crisis, that the impact of the austerity measures was underestimated at the beginning, which led to the need for Greece to seek a second package in 2012. A message that I want to send is that Greece has had the biggest fiscal consolidation in the history of OECD. We moved from a deficit of over 15% in 2009 to a primary surplus in 2013 and 2014, a year ahead of the program, and we will be achieving a balanced budget in 2015. From a current account point of view, in 2013, Greece had a surplus for the first time since 1948. And we also were the first European country to move for the recapitalization of the banking system, which was a fundamental pillar for returning the economy from 2014 back to growth. We expect the quarter just ended to be the first positive quarter of growth since 2008. And because there was a lot of discussion about Greece in the headlines the last few days, if I can send two quick messages to the financial community. First of all, that Greece remains fully committed to its fiscal and reform targets. And second, we will continue to work with our partners in ensuring that Greece will not have any sort of refinancing risk in the years to come. But all this adjustment, which was a multiple of what other countries were asked to do with similar problems in the Eurozone, the impact is not linear. We came with a 27% unemployment rate. We have 1 out of 3 Greeks now below the line of poverty, and that has a consequence for politics. But not for domestic politics, because if it was just domestic policies, you could say it's just a problem for Greece to solve. It is obvious in the last few years, and also was obvious, as Sharon said, in the European elections, that politics will become more unpredictable in all European countries, not only Eurozone crisis. And people are feeling a bit differently for the Eurozone because of the very tough austerity on the South and the feeling in the North that they have been subsidizing the spending of the South. Talking about the growth agenda is a tough agenda. I mean, Europe is facing structural problems, and it's not just the South or the North. Demographics, high level of debt everywhere now, well above the 60% Maastricht level, which people then deem to be the highest level, and relative competitiveness is reducing in the European countries versus the emerging world. I think it was 2011, the last year, that FDI to the developed markets surpassed FDI in the developing markets. So Europe has a lot of competition for investments. We need more reforms. We need to keep, of course, fiscal discipline. We need more trade. And at the European Council, we're working hard to ensure that we have the kind of trade agreements with the US, with Canada, the major markets that can help boost European growth. And funding is an issue. And I think the MiFID II, the LTIFs, where they focus more on SMEs, we need to find alternative ways to finance SMEs at this level of crisis. In Greece, we're going to be opening a bond market for SMEs. We're working with other governments to fund, at arm's length level, an SMEs development bank, which is critical to bring more money into the economy. My last word, we probably need to think about inflation again. I understand there was a speaker in the morning that said that the risk in Europe is not deflation, it's inflation. Inevitably, developed economies at the level of debt they have, they will need to rediscuss the concept of inflation in the years to come. Thank you.